Hey everyone, welcome back to Corporate Decoder, the place where we sift through the boring business documents so you don't have to. Today we're diving into a Form 8K filing, and trust me, it's juicier than it sounds. Think CEO swaps, big payouts, and maybe a little bit of corporate juggling. This Form 8K is basically a corporate breaking news report. Companies use it to tell the Securities and Exchange Commission, also known as the SEC, about major events that could affect their investors. Think of it as a company's way of saying, hey, big things are happening, pay attention. This report is dated February 12th, 2025, meaning that's the day the events being discussed happened. So let's rewind to that date and see what Connexa Sports Technologies Inc. was up to. Our company today is Connexa Sports Technologies Inc. They are based in Delaware, a popular state for incorporating businesses. Their main office is in Smyrna, Delaware. You can find them on the NASDAQ Capital Market under the ticker symbol YYAI. Now, these boxes being unchecked simply mean the company isn't trying to use this filing to do other things like make offers to buy stock. Their common stock shares that represent ownership in the company trade on the NASDAQ Capital Market under the ticker symbol YYAI. The company is not an emerging growth company. This detail is not super important for us right now. Now for the main event, item 5.02, which details changes in the company's leadership. That means changes at the top. On February 12, 2025, Connexa's board of directors approved employment agreements, which are contracts with two key people. Thomas Tarala as CEO, Chief Executive Officer, and Gibao G as CFO, Chief Financial Officer. The filing mentions they had been in those roles since November of 2024, but now they have formal agreements. Thomas Tarala was also appointed as the company's secretary. Let's start with Thomas Tarala, the new CEO. He's got 30 years of experience in corporate finance working in New York, London, and Hong Kong. He was a partner at two big international law firms and also worked as general counsel for a large private company in China. Basically, he's been involved in a lot of deals, including advising on stock and bond sales, as well as joint ventures, which are partnerships involving companies listed on NASDAQ. He also worked on mergers and acquisitions, which means buying and selling companies. Before becoming CEO of Connexa, he was general counsel at H&A Group, a large conglomerate, which is a bunch of different businesses under one umbrella. There he handled billion-dollar deals. He's got degrees from Georgetown and the University of Virginia and speaks several languages. The filing confirms he's not related to any other officers or directors at the company and that there were no special deals or understandings that got him the job. Now let's talk about his employment agreement, the terms of his contract. It's for 5 years, but the company can end it early by giving him 180 days notice, which is about 6 months. If that happens, he gets to keep all his stock options and other compensation, even if they haven't fully vested, meaning he doesn't have to wait to earn them. His annual base salary is $720,000. He also got a signing bonus, which is a bonus for joining the company of $300,000 in the form of the company's stock. He's also due a $1 million bonus, a success fee for his role in Connexa's merger with Yuanyu Enterprise Management Company Limited, or YYEM, and the company being listed on the NASDAQ. This bonus hasn't been paid yet. He's entitled to an annual bonus of at least 100% of his salary, which can be paid in cash, stock, options, or warrants. Mr. Tarala is also entitled to a special bonus if there's a change of control of the company. If the company gets bought out or undergoes a big change that increases its value, he gets 3% of that increase. That right to receive the special bonus is valid for 2 years, even if he is no longer employed by the company. The filing defines change of control to mean a few different scenarios. Someone buys more than 50% of the company's stock. The company merges with another company unless the original shareholders still own the same proportion of the new company. The company shuts down or sells all its assets. The company buys a controlling stake in a business bigger than 66% of YEM. Or the main business of the company changes from licensing matchmaking technology. He can also participate in any bonus or incentive plans the company offers. Any securities he gets as part of his compensation will be registered with the SEC, ensuring they're legally tradable. He can also participate in any equity or option plans the company has for its employees. If the company doesn't have enough cash to pay his salary, he can defer, which means delay the payment and treat it as a loan to the company. He can then convert that unpaid salary into shares of the company at a set price. Finally, he has the right to include any shares he gets from the company in any registration statements they file with the SEC. This allows him to sell those shares more easily. Now, let's move on to Guy Baoji, the CFO. He has 25 years of experience as a certified public accountant in China. He's worked at Shenzhen Wanda accounting firm and is an independent director of several listed companies. He graduated from Central Radio and TV University and is certified by the Chinese Institute of Certified Public Accountants. Like Mr. Tarola, the filing confirms he has no family ties to the company's officers or directors, and there were no special arrangements that led to his appointment. His employment agreement can be terminated by either party with 1 week's notice for the first 3 months and 1 month's notice after that. His annual salary is $250,000 and he's eligible for a discretionary bonus based on the company's performance. The filing mentions that the details about the employment agreements are just summaries and you can find the full agreements as exhibits to the report. These exhibits are the actual employment agreements which go into all of the legal terms and definitions. So, what does all of this mean? Connexa Sports Technologies has formalized the employment of its CEO and CFO, outlining their compensation responsibilities and the terms of their employment. The CEO's package is heavily incentivized with bonuses tied to the company's success, particularly the merger and Nasdaq listing. This suggests the company is betting big on its future growth and wants to reward its leadership for achieving key milestones. Looking at Connexa Sports Technologies, the company's direction seems to be focused on growth and expansion. Securing experienced leadership like Thomas Tarala and Guy Baoji is a positive step, but the high compensation packages, especially for the CEO, raise questions about the company's financial priorities. One notable risk is the company's reliance on achieving specific milestones like the successful merger and Nasdaq listing to trigger bonus payouts. If these goals aren't met, it could impact the company's financial performance and investor confidence. The stock price outlook for Connexa is uncertain. While the company has potential for growth, the high compensation packages and reliance on key milestones make it a risky investment. Based on the information available, it's difficult to determine a precise target price range. In conclusion, Connexa Sports Technologies shows promise but also carries significant risks. I'm leaning towards a neutral to bearish stance. The company's success depends heavily on executing its growth strategy and achieving its financial goals. Thanks for watching Corporate Decoder. If you found this analysis helpful, please subscribe, like, and comment below.